The Reserve Bank of New Zealand has increased interest rates for the second straight month, highlighting a growing difference between its policy and that of the Australian Reserve Bank, which continues to say rates will stay on hold for at least a year. Ross Greenwood reports.
New Zealand's Reserve Bank has raised its official interest rate to 0.75%, up from 0.25% just 2 months ago. And, most likely, there's plenty more of that to come.
The committee noted that further removal of monetary policy stimulus is expected over time, given the medium-term outlook for inflation and employment.
But the Kiwi rates policy differs markedly from that of the Australian Reserve Bank, which this month reiterated its view that official rates will remain on hold, most likely for more than a year.
It's still entirely plausible that the first increase in the cash rate will not be before the maturity of the current target bond, that is the bond with a maturity date of April 24. But it is now also plausible that a lift in the cash rate could be appropriate in 2023.
The fundamental difference between the two central banks is their view on inflation. In New Zealand, the expectation is that higher oil prices will push inflation above 5%.
The near-term rise in inflation has been accentuated by higher oil prices, rising transport costs, and the impacts of the global supply shortfalls. These immediate relative price shocks risk generating more generalised price inflation, especially given the current domestic capacity constraints.
But Australia has a different view.
We are not expecting the surge in inflation that's been experienced in some other countries. The situation in Australia is quite different.
In short, the Australian Reserve Bank says we haven't seen as many jobs disappear as a result of COVID lockdowns, and that supply disruptions and energy prices have not had such a big impact on prices. Money markets, though, say something different. Interest rates on 3-year government bonds have, in just the past 2 months, jumped from 0.3% to just under 1%. The markets say the Reserve Bank will be pressured to raise rates sooner here than it expects. And that's the reason why banks right now are raising the rates on fixed rate mortgages. Ross Greenwood, Sky News.